Now, what I want to talk about now is a trading plan. And can I just ask, before we carry on, how many of you here have a written trading plan? Let me just ask. How many of you here have a written trading plan? Gregory, I should hope so, but I'm glad you have. Ryan, well done. That's good. Okay, well done, Herman. That's good to see. A lot of our regulars here. And please, if you haven't, please tell me. Type in no. It's important that I know from the group here how many of you have a written trading plan and how many of you don't. Okay, a lot of people typing in no now, so that's good. At least I know. I can assure you it's one of the most important things in trading. Ron says, I've been having trouble formulating one. Emmy says, I'm working on the details. Okay, good. Well, hopefully, Emmy, the plan that I'm about to give you will help you, give you some ideas. The plan works for me, and I've given this plan out to several, probably 100 traders in my mentorship courses, and I've had a lot of good feedback, so hopefully it will work. But let's look at some of the reasons why people lose money in the markets. Now, I can tell you that my research that I've done is based over 13 and a half years, and I have met, I would say, thousands of retail traders. I've met some of the top hedge fund managers in the world. I'm working with the biggest gold trader at the moment in the world. We're working with him here in England. So I can tell you I've worked with some of the best, and I've also worked with people who just have got no chance of making it in the markets. And I think I found out the main reasons why that is. And, you know, when I go through these with you, you can answer for yourselves whether you fall into any of this criteria. But if you want to make it in the market, as Richard Ney once said in his book of the 1960s, Making It in the Market, you have to know the game. But there's one thing even stronger than knowing the game you have to understand, and that's yourself. You know, he who conquers others is brave. He who conquers himself is mighty, is a saying that I once read. It's very true. You know, it is ironic, but our own worst enemies are ourselves when it comes to trading and investing. Self-sabotage and doing all the wrong things. And look, trust me, I've been through this. I've made the mistakes. I've made the losing trades. I've gone through the pain and the suffering. So I know that it's not as easy as people want to make it out to be. Trading is actually quite difficult. In fact, I'll just quickly read to you this article, which I think, I won't read you the whole article, but it is a very good example, in my opinion anyway, of some of you may have seen this, some of you may not have seen this. But if you want a copy of this article, just email Ken at tradeguider.com. Okay, so this is Tim Raymond. Some of you may be familiar with Tim, some of you may not. But Tim was formerly a journalist here in the United Kingdom, and he turned to Forex after retiring from journalism to become a Forex trader. And he's one of our customers. He uses volume spread analysis, and he uses our real-time software with the eSignal. And, you know, he's not only won the competition once, Trading Real Money, he's won it twice. And he's a full-time currency trader. He won in 2009 with a 44% gain. And he talks about the ethic of what makes a great trader. So this article we will send to you. It's a very good article. But I'll just read this to you. It tells the story of how he became a trader, how he overcame problems. And he says here, early mentor. In 1998, Raymond had the good fortune to connect with Tom Williams, the creator of volume spread analysis. I rang him, and he was very reluctant to sell me his software. He said, trading is very difficult, you know. I insisted and agreed that I would pay £5,000 in instalments, Raymond says. These days, if I'm asked by someone who's starting out in trading for advice, the first place I send them is the Trade Guider website. For me, it demystified the market to a great extent. So Tom, who's also my mentor, and indirectly your mentor, actually said to him, trading is very difficult, you know. And we all know that if it was easy, everyone would be doing it. But there are a lot of people that find it tough. And that is saying, do we have anything in the software which can calculate timing in advance? And now you're going to need to be more specific about your question. What do you mean by calculate timing in advance? Not sure what you mean by that, what you mean by timing in advance. If you can try and be a bit more specific, I'll try and answer it for you, but I don't understand the question. How do we calculate timing in advance? How do you know when to, a time when to trade? Absolutely. It's very straightforward. If you see the market changing direction in 3 time frames, and you see a serious sign of strength or weakness that's causing that change in direction, and again, in the RT software, I just use the scanners here. I mean, I'm actually watching for a trade in gold. Here's why. What colour, let me ask you, Anand, what colour are the diamonds here at the moment for the last 24 hours? Because this is a 4-hour chart. What colour, can you see that? Hopefully you're not colourblind, but what can you see here? What colour are the diamonds? Yeah, absolutely, Anand. No problem. But all of you said green. Okay, so we're still trending up. But look here. The hourly is turning red. It's changing behaviour. The 30-minute, changing behaviour. The 15-minute is changing behaviour. The 5-minute is going into congestion. Once that changes and these begin to turn red, I've got alignment in 3 to 4 time frames, and most importantly, I've got weakness in the background and a rejection of price. Okay, so I wouldn't trade yet, but I am looking for that change in behaviour. So hopefully that's clear. But by all means, Anand, send me an email and I'll answer it more specifically. But that's all I'm looking for. I'm just looking for unusual volume followed by low volume at the same price level, followed by a change in behaviour. It's not, and I'll show you in my trading plan, it's really not that complicated. And I think some people, unfortunately, get analysis paralysis. They try to do too much. My trading office is very straightforward. It's very organised. I've got a very large monitor where I use my main screen, and then around me I've got 4 or 5 other monitors, but they're looking at pretty much the same thing. I've got an alert system that tells me when an email alert system. In fact, there's some coming in right now. Look, so here we've seen. I'm really looking for the end of a rising market if I see it. So that's the Nasdaq. Okay, and let's have a look. We've got quite a few coming in now. Okay, gold has got some buying going on actually in gold, so I better keep an eye on that. Gold's got some support coming. Nasdaq's got some more weakness appearing. So the Nasdaq at the moment is alerting me that it's looking a bit weak. So it looks like that might actually fall a bit. At the moment the weakness is appearing, but it's not changing behaviour. This is what the alerts are picking up, look. Okay, but I have to say I would not be short in this market at the moment. I've got a funny feeling that this at the moment is going to fill a gap again, and we've got the same signal down at the bottom, look. Nasdaq looks very strong. Yeah, and it's coming up. It's going to fill that gap, isn't it? So is the S&P. Just have a quick look at the E-mini. Oh, look, that's the Federal Reserve. That's what's doing it. That's why I said we'd have a decent move today. The Fed have come in. There was the reversal. And look, it's just took off. It's filling the gap. It's going to go to 1680 for sure. And did we get any real signs of strength? That's what's causing it to go up. It is a 2-bar reversal. It's a very serious sign of strength. Look, that's what they're coming up to this area here. They'll get there. It'll get there. Okay, Anand, that's absolutely great. Good. All right then, so let's look at the 10 reasons why traders lose money. Now, I treat this in a very positive light because if you can identify your SWOT, strengths and weaknesses, and work out what you're good at and what you're not good at, you have got a really good chance of putting into practice and there's many ways you can identify your own strengths and weaknesses if you're honest with yourself. And when it comes to trading, you have to be honest with yourself. It's very important. Now, I've said here, losing traders do not have a trading plan. Okay, Gav, how do we get a plan and follow it? Well, some of you have already got a plan. Many of you, I'd say 80% of you here, typed in, I don't have a plan. So you will get a copy of my personal trading plan, which is very personal to me, but I share it because I think it's valuable to people to have it. And I know that the people who followed some of the stuff in here have said, Gavin, your trading plan also appears to be like a life plan. I said, that's exactly right. I'm a big believer that in order to get on in life, you must plan and you must have a strategy. I've created for myself financial independence, multiple income streams. Obviously, I'm an author of 2 books with a 3rd one coming. And all of it is because I've planned what I wanted to do. And becoming a hedge fund manager was one of those things. Now, it didn't all happen by accident, and it didn't happen overnight. A lot of information that I found made me realize that you have to follow certain plans. So I'll come back to that at the end when I finished these thoughts. But losing traders, okay, they do different things on different days. They are totally inconsistent in their trading. So what causes inconsistency? You doubt your plan, or you don't have a plan, or you're not following a plan, and what happens? You make losses. A trading plan will give you structure around what you're doing. How many of you here, just type in business or hobby, how many of you here think trading is a business? Type in business, or trading is a hobby? Type in hobby. What do you think? Is trading a business or a hobby? I agree with you, it's a hobby. Some people are going to type in, hey, it's their hobby. They may not be trading loads of money. They may be trading big money. But I'm going to say to you, for me personally, trading is a business. Okay, it's a business. It's, in fact, the biggest business in the world. More money exchanges hands in the financial markets than any other business. Now, if that's the case, if you talk to any good businessman, first thing you should ask them is, do you have a business plan? And if they're a good businessman, they'll have a business plan. A trading plan is a business plan. That's really what it is. And it helps you to recognize if you're being inconsistent, right? Inconsistent in what you're doing. For instance, a lot of traders that I've met that are unsuccessful tell me, I say, which time frames do you follow? They say, oh, well, I don't have a particular favorite. I just go for one day I look at the 1 minute. You know, if it makes money, I stick with that. Next day I look at the 5 minute, then I might look at the hourly. And they've got no real logic behind it. There's no logic behind why they're looking at these different time frames. I have a logic behind why I look at the different time frames, because I'm looking for a change in behavior in the time frames. Yeah. So in my businesses, I have business plans, and I find them to be very important. So losing traders do different things on different days. Consistency in trading will help you understand why you're actually taking a trade. Not relying on a MACD or a stochastic just to give you a big green signal. In case you haven't noticed, Trade Guider is not just about red and green indicators. Everything is about reading the price bar. Okay? See, you read it. And that's how I learned to read a chart and become a chart reader. And that's how I learned, and it gave me the knowledge to write a book, because I just kept looking at charts day in, day out. It's a bit like trying to become a professional golfer. If you want to be a professional golfer, you're going to have to keep playing golf regularly. And you're going to have to be taught by someone who's very good at golf so you get the correct swing. No different in trading. You've got to have the right education, you've got to be taught the right way, and then you've got to practice it. So when you leave this little mini mentorship course, don't just do nothing. Go and read my book again. Go and find Tom's book. If you haven't got the software, get the software. Look at the indicators. There are plenty of things here that will help you. This is a key one for me. I think this is a key one in life. Losing traders have no belief in the strategy they're using. In fact, many jump from one system to another within a couple of months because they just can't make any money. They never actually try and learn a system. They just jump from one to the other, trying to find the Holy Grail. Belief in what you do is absolutely key to your financial rewards. Remember, a computer doesn't think, it just computes the information that's been put into it, and it doesn't recognize financial reward. When you use computerized signals that are red or green, they should have an underlying explanation as to why they're there. The genius of Tom's work and the Wyckoff BSA indicators is, although you get a lot of indicators, and by the way, you can filter a lot out by just clicking that button, and a lot of people didn't know that. In the software, you can actually filter out and just have the highest probability indicators. Okay, but I always leave them on the highest sensitivity, but there is a button that filters out the indicators, so you only get the highest probability. Notice here, the only indicator that we got here was the reversal, and look at what the price has done. Okay, and here we had a sign of weakness. Now, is that a place to short the market? Absolutely not. You've got to say, read the dialog box. Look carefully. Do you have strength or weakness behind you? Right? This is strength. It's got a green indicator. So you don't want to be short with that type of indicator there. And this is one of the things that I show people is when you have got a trading plan, I believe in volume spread analysis because I haven't been taught anything else, and I make money with this system. And so does Tim Raymond, and so does Earl Aaron, and so does many of our customers. So I know with the right effort on the individual's part that's learning this, you can and you will make money in the market. Will you have losing days? Yes. Will you have winning days? Yes. Will you have days where there's no permission to trade? Yes. But overall, if you've got good risk management and a good trading plan, and you believe in it, and you put your hand on your heart and say, I believe in this system, then you will be a success. Robert says, Gavin, please, how would you filter certain indicators? I've got a very simple way of doing it. If I see an indicator on massive volume higher than the previous 100 bars, like that one, with a green indicator on it, that's very important. In fact, I was right. They did test it. Here, there's a test, and that's why it's gone up, and they are going to fill the gap. Now, we probably here will get another opportunity to go long, because if the market falls here on low volume, and I know there's an opportunity here potentially to get long because we are trending up on these 5-minute charts. And Tom Williams has a very simple trending system. He says that in an up move, you can allow for one down bar or a level bar, but if the bars stay blue, okay, and just ignore the level bars altogether, there's a down bar. If we have another down bar on low volume and then another up move, then the market's going to continue to trend higher. And we're due an up move because we've had consecutive days in the S&P of down moves. So it wouldn't be surprising to see the market respond. Now, the other thing I like to do, so the answer to your question, Robert, is I give a lot of attention to massive volume bars that are higher than any of the other bars around them. And then I know something's going on. That's how I just filter it with my own, just using my eyes. But in Trade Guider, we've got this system here, which does it for you. It just filters out. So if you don't want too many indicators on your chart, just click that button there, and it filters it for you. And you can see it picked out this 2-bar reversal perfectly. And that is a very strong sign of strength, as I said earlier. So, number 3, losing traders think and act like gamblers. So a card counter that goes to Vegas puts the odds in their favour, which is why they're banned if they're discovered. As a retail trader, you can put the odds in your favour if you study for a few hours each week. Are you prepared to study and make money? Well, I can tell you that in VSA, when you're trading the markets, it's not gambling. I don't care what anyone says. You're not gambling. If you go to Vegas and put your money on the roulette wheel, and as soon as they put the hand across and say, no more bets, please, you can't take that bet off. You're stuck there. and the house always wins. But with trading and investing, you can manage your positions. That's the wonderful thing about it. You can manage positions. And if you see a chance and an opportunity to manage a position and scale in or out of it, then you are managing a trade and you're measuring risk versus reward. Okay, that is what good traders do. They manage their risk versus reward ratios. And on that, they're able to manage how much they lose. Most traders, I'll show you in my trading plan, you don't want to risk more than 2.5% of your capital in any one position. So not more than 2.5% maximum of your capital in any one position. So again, I would stress that when you're trading these markets, if you know what you're doing, you are not gambling with the market, you're measuring your risk reward. Most losing traders that I meet are continually trying to find what's called the Holy Grail. The Holy Grail is a computer system where you press a button and it just continually churns out money. Well, even the big professional money doesn't have that. They have to make losses. In fact, a few years ago, Goldman Sachs had to close one of its funds because it made massive losses with a computerized system. The market is always changing behavior. One day it's bullish, the next day it's bearish, and then for a few days it can go sideways. So trying to apply a mathematical formula to the market is almost impossible, which is why so many people fail. Now, we have managed to find what we call sequences that happen, and we're looking for simply distribution and accumulation. But although we are a software company, our software is there to educate you. That's what it's there to do, to make you and your brain recognize patterns that, when they appear, give a higher probability of a trade setup. A lot of software that's being marketed to people in this business claims to have a certain percentage of accuracy. I've seen several only last week saying, buy our software, it's a Forex robot and it makes 280% a week. Well, if that was true, would they be selling it? Of course they're not. And actually one of our customers bought it. It's a load of rubbish. But that's the problem. And they don't give you a money back guarantee, and they're selling you rubbish. So, right, and I thought, well, Pat says here, I thought the Holy Grail was VSA. Let me say this to you, Pat. Everyone has the Holy Grail of trading, but it's in themselves. It's in their own makeup and their brain. Why do you think it is that some traders, like Greg Kofi, for instance, who I talked about last week, he made $600 million in the market last year. He's a human being, nothing particularly smart about him. He just understands the market. And how do you think Tim Raymond made 1 or 44% on his account? Yes, he was using volume spread analysis. Yes, he was using the Trade Guider software, but he found a system and a plan that suited his personality. Let me tell you, there's a lot of you in this room, and all of you are unique. You're all different. And it's very, very easy for me to come out here and say, yes, our software is the Holy Grail, and if you buy it, you're all going to make 500% next week. But that would be a lie. It would be rubbish, because I have no idea. What I do know is this. If you follow certain rules, if you have a trading plan, if you understand how to use the software correctly, and there's a trading course that goes with that, then yes, you can get as close to the Holy Grail as we think you're ever going to get. But ultimately, as I said earlier, the people that are the problem in trading is not the software, it's not the books that are out there, it's the individuals. Unfortunately, and even I know this for myself, when I first started with VSA, I was very, very impatient. I didn't want to sit in front of a computer for 6 hours and not take a trade. So consequently, I took trades that weren't there and I lost money. I very quickly learned that that wasn't a full strategy. And although I could afford to lose that money, because I always say, trade with money you can afford to lose, and then you don't get too attached to it. There's nothing worse than being under total stress that if I make a losing trade today, oh my goodness, I can't afford to eat tomorrow. That's not how you should be trading. You must always trade with money you can afford to lose. Marco's asking, what happens if you see a wide spread or a long spread on very low volume? that tells you that the market maker is doing something in that chart. That it usually widespread bars are associated with at least average volume. But Marco, if you see a low volume widespread bar, you should keep an eye on it because there's something going on there. And if the next bar, if it's on a down bar, springs up, that's bullish. That would be a reversal, Marco, definitely. Pat, I have to say, Mr. Williams actually invented volume spread analysis for a computer. And let me tell you where the computer is a benefit. Okay, this is where it's beneficial. What a computer can do that a human being can't do is monitor multiple things at the same time. Computers are very good at multitasking. Let me show you why, because we're doing it right now. So here we go. Pat, can you see a chart here? This is the Sierra Charts platform. Here. Can you all see this? So this looks very busy, all right? Very, very busy indeed, as you can see. But you'll notice I'm monitoring the 10-year note, the Aussie dollar, the Canadian dollar, the crude oil, the Dow, the gold, the euro, the NASDAQ, the gas, the pound, the mini, the silver, the US dollar, the yen, and on my other computer I'm monitoring Apple, Microsoft, Google, 50 stocks I'm actually watching. And every time an alert comes in, it's going to send me an email to my email address to tell me I've seen unusually high volume, Gavin, followed by unusually low volume. Once I get the email, I can then go back to look at the chart. That is what computers are particularly good at. And then certain indicators within the VSA software have the highest probability of a move. And those are the ones, I can tell you, that happen on ultra high volume with a narrow spread bar. Those are the ones that turn markets. Those are the ones that make me more money than any other indicator. As soon as you see, and I'll even give you their numbers right now. If you've got a pen and paper, this is what I've programmed in. These are the numbers for the indicators that have the highest probability of turning the market. And some of them are 2-bar reversals. Yep, they are. Some of them are reversal bars. So, if we look at the signs of weakness first, right, these indicators all have a number, okay, and they're all based on ultra high volume. Okay, now these have all been programmed in to initially the Infinity platform and Sierra, so that when the software recognizes this particular number, it sends an email alert, which you can get in various ways. Mine happens to come to my iPhone, and you'll see that, in fact, we've got some more coming in at the moment, actually, as we speak. Let's have a look. No, nothing there at the moment. But as soon as one comes in, it tells me via an email that a principle using VSA has appeared. So here are the key principles of weakness. Sign of weakness 1, SOW1, a buying climax. Now, let's look at what an example of that. SOW1, a buying climax. This looks like it wants to go up higher as well, but a sign of weakness, SOW1, see if I can find you an example of a buying climax. Let's have a look. Here we go. Sign of weakness 1. You can see what it does to the market. It knocks it sideways, so it doesn't immediately change behaviour, and then boom. Okay, and the market here is marked up again for more selling. Finally, as we can see, we up thrust the buying climax, and we come down. So sign of weakness 1 is a very serious sign of weakness. Then we have the following numbers. Sign of weakness 5, the end of a rising market. Sign of weakness 14, end of a rising market. Sign of weakness 21 is the end of a rising market. Sign of weakness 22, the end of a rising market. Sign of weakness 23, the end of a rising market. Sign of weakness 24 is the end of a rising market. Sign of weakness 30, the end of a rising market. My favourite one, sign of weakness 71, end of a rising market. And those will mark, without a shadow of a doubt, turning points in the market so you can short the market. Now, we also have reversals at tops, which again, just like the bottom reversal you just saw in the E-mini S&P, this will mark the top of a market very often. Sign of weakness 94, which is a 2-bar reversal. Sign of weakness 97, which is a reversal after effort to rise. Sign of weakness 108, which is a top reversal. And sign of weakness 126, which is a 2-bar reversal. Now, losing traders often have too many systems and too many indicators, so they don't know what the chart is really telling them. The chart never lies, okay? And if you read the chart correctly, you'll know without doubt when professional money is selling and buying. Now, the other problem that traders have is being undercapitalized, which means they're trying to trade a $1,000 account in the futures market trading 3 contracts if their broker will let them. That doesn't make any sense. That doesn't make any sense. You've got to have the capital to trade, okay? And if you haven't got enough capital to trade at the moment, save some money up and get the capital, because you're not going to be successful if you're undercapitalized. So losing traders do not understand how markets work, often believing that price moves markets, but it does not. The forces of supply and demand and the trading of the smart money cause the price to move. Losing traders always follow the herd. Now, you will not do that anymore. I hope if I've achieved my goal of this mini mentorship course, you realise the importance of when you see markups on good news or markdowns on bad news, it's probably telling you, hold on a second, look more closely at the chart. Be aware you may be getting set up for a bad trade. How do you prevent yourself being a herd member? Come to a course like this, because the information in it is the truth. What I'm telling you is correct. Once you read a price chart correctly, by the way, you have this knowledge with you for the rest of your life. And Marco, don't worry, I'm going to send you a copy of the book as part of this course. When the recording goes out tomorrow, there'll be an email that has a copy of my first and second book, and also the articles that I'm referring to right now. So you'll get that, and also this PowerPoint slide that I'm using as well. I say a little comment here. Your mind is like a parachute. It's best used when it's open. You know, that means be very open-minded to anything. Those people who are open-minded get knowledge. Discipline. Something no one can, I don't think anyone can teach people discipline. I mean, if you're a soldier in the army and you've had discipline problems in the past, they still try and drill it into people, and sometimes they fail. But fortunately, you don't have to be a genius to be a successful investor. As Berkshire Hathaway chief and investor extraordinaire Warren Buffett said in a 1999 interview with Businessweek, success in investing doesn't correlate with IQ once you're above the level of 25. Once you have ordinary intelligence, what you need is the temperament to control the urges that get other people into trouble in investing. It's true that not everyone is gifted with Buffett's calm, cool demeanour, but challenging yourself to avoid your own worst instincts will help you reach your financial goals. Keep winners longer. Okay, in last week's mini mentorship course, which I believe will be made available, I covered how you stay in a trend longer. Okay, investors in Odin and Barber's study, which is a study on financial behaviour, that people were much more likely to sell winners than losers. That's exactly what behavioural finance theorists would predict. They've noticed that investors would rather accept smaller but certain gains that take their chances to make more money. On the flip side, investors are reluctant to admit defeat and sell stocks that are underwater in hopes of a rebound. As a result, investors tend to sell their winners too early and hang on to their losers for too long. You also shouldn't be afraid to sell a loser because it will turn a paper loss into a real one. Hanging on to a dog in hopes of breaking, a dog is called a bad trade. In hopes of breaking even is a bad idea because you may be foregoing a better opportunity elsewhere. The trick is knowing when it's time to cut bait. That's why it pays to have clear reasons in mind for your purchase of any investment right from the get-go. If your expectations don't pan out, it's time to sell.